Assalamualaikum. Today my name is and I will be presenting our assignment for FIN 2593 Islamic Financial Management subject. Please meet our group, which consists of 4 members. Start with Nur Hanani, Nurul Infan Shira, Nur Najwa Akila, and me, Nurul Khadija. For today's agenda, we will go through 7 things together. First and foremost, the scenario of the assignment. Second, the introduction for financial market type. Third, financial institution that provides trading process. Fourth, suitable investment product for Mr. Haikal. Fifth, the comparison between products and comments for each one of them. Sixth, Sharia perspective on each product. And to sum up, the conclusion. Let us begin with the scenario of the assignment. Glasstrack Berhad is an integrated logistic-based business group, warehouse and transportation throughout the country. Haikal is currently working as a senior finance executive in Glasstrack Berhad. He is appointed by the company to conduct some research regarding the suitable investment product that can generate profit for the company in the future. The company provides an allocation with Rm 1 million for an investment and allows him to seek for advice from any investment bank. As one of the staff in the E&Y Consultant Investment Agency, are appointed by the company to advise Mr. Haikal regarding the investment product that suits his demand. What is Islamic money market? It is a financial market that operates in accordance with Islamic principles, which prohibit the payment or receipt of interest, which is riba, and promotes ethical and Sharia-compliant financial transaction. It serves as a platform for short-term, low-risk financial instrument and transaction for participants in the Islamic financial industry. The main function is to provide a way for Islamic financial institutions to invest, manage liquidity, and conduct financial transactions in a manner consistent with Islamic principles. The market plays a crucial role in facilitating short-term funding, liquidity management, and investment opportunities for Islamic banks and other financial institutions. As for Islamic capital market, it is a segment of the financial market that operates in accordance with Islamic principles, primarily Sharia law, and is designated to facilitate the raising of capital and investment activities in a manner that complies with Islamic ethical and financial guidelines. It offers a range of Sharia-compliant financial instruments and investment opportunities. Islamic capital markets have gained prominence over the years, attracting both Muslim and non-Muslim investors seeking ethical and Sharia-compliant investment opportunities. They play a vital role in channeling funds into sectors that align with Islamic values, such as infrastructure, real estate, and ethical businesses, while promoting financial inclusion and economic growth in regions where Islamic finance is prevalent. Thirdly, Islamic derivatives market is a financial contract designated to serve various risk management and investment purposes while adhering to Sharia-compliant principles. IDM is ongoing, and financial institutions and regulatory bodies in the Islamic finance jurisdiction work to create standardized and compliant derivatives product. This allows participants in Islamic finance to manage risk and engage in a financial transaction while adhering to the ethical and religious principles of Islam. Finally, the offshore market. Offshore market refers to a financial market or financial activities that occur in a jurisdiction outside one's home country. These jurisdictions, often referred to as the offshore financial centers or tax havens, offer certain advantages and incentives which can include tax benefit, regulatory flexibility, and privacy to individuals and businesses. Offshore markets offers various advantages. There also has use been associated with concerns related to tax evasion, money laundering, and other illicit activities. As a result, many countries have increased regulation and reporting requirements for individuals and businesses engaged in offshore financial activities. The use of offshore markets is a complex and evolving area of finance, and individuals and businesses considering offshore activities should seek legal and financial advice to ensure compliance with relevant laws and regulations.
Today, I will explain about financial institution company that provide trading process. First company is RHB company. It is multinational regional financial services, and it also supports simple, fast, and seamless customer experiences under PIP. RHB Bank also rank among the top banks in Malaysia with a significant presence in Asia. RHB Bank have more than 14,000 employees group-wide. Next, it is fully integrated financial service group in Malaysia. The core business are structured into 5 business pillars, namely Group Community Banking, Group Wholesale Banking, Group Shariah Business, Group International Business, and Group Insurance. RHB Bank offers a wide range of financial services. They are involved in various investment banking activities. Next company is Maybank. Maybank is one of the largest and oldest banks in Malaysia. Maybank offers many products to the customers, such as unit trust. Maybank typically offers a selection of unit trust or mutual fund products. Maybank also essentially lending money to the issuer in exchange for periodic interest payments and return of the bonds face value at maturity. Maybank also offer exchange traded funds for the short form is ETF, investment funds that are traded, and for Islamic investment, Maybank is also offer Sukuk. Sukuk is different from conventional bonds because they comply with Sharia guidelines. Next, I will explain about the suitable product investment. First product is unit trust. Unit trust is one of the most popular managed investment. It is easily accessible and affordable for those who are just starting out on their investment journey. Unit trust also a wide range of assets. Unlike robo-advisor, your unit trusts are managed by professional fund managers who are expert in their field and will help you invest according to your risk appetite. As you can see, this is the calculation for unit trust, which is price divided by the current price of unit trust. As you can see, 0.7% is the price of unit trust if they invest in the company. Second is stock. Stock is equity ownership in a publicly traded corporation is represented by stock investment. It is also part of a capital raising strategy to a fund. It is a variable growth possibilities and are often evaluated. Stocks are grouped into numerous categories and may pay dividends. So here is the calculation for stock. For example, RHB equal to 5.67 equal to 900,000 divided by 5.67. So you can get RM 899,000.999. Next is for projection equal to 7.00 equal to RM 158,000 times 7.00 equal to RM 1,111,110. Last but not least is ASB. ASB launched by Amanah Saham Nasional Berhad ASNB on 2 January 1990 for all Malaysian Bumiputera. It was designed as a fixed price equity income fund where the price per unit of the fund is fixed at RM 1 ringgit with no sales charges and no fees. Investors are free to decide the amount to invest at any time and can top up or subscribe to additional units via the relevant ASB agents. The dividend of ASB is distributed on a yearly basis but compute monthly based on the minimum amount of the month. So the calculation for ASB is, for example, RM 4,100 times 0.69. So the total is RM 276,000.
Move to the next, which is comparison between stock, ASB, and unit trust. There are 5 aspects, which is ownership, risk and return, income, liquidity, and lastly applicability. For the stock, the ownership share is in a company, while ASB, the ownership is unit in a Malaysian government-linked investment fund. And lastly, for unit trust, unit of a professionally managed investment portfolio. For the risk and return aspect, stock are higher potential return and higher volatility. ASB are relative stable, dividend-based income and potential for capital appreciation. And for the unit trust, the risk and return depends on the underlying asset fund strategy. From the income aspect,
Stock are potential for dividend, not guarantee. For the ASB, regular dividend based on fund performance, and for the unit trust, dividend and interest are from underlying portfolio. For the liquidity, stock are highly liquid, easily bought and sold. For the ASB, subject to redemption period and restriction, and for the unit trust, the liquidity is generally at NAV price. Lastly, for the applicability, stock are global investment option, while ASB are primarily for Malaysian Bumiputra, and unit trusts are diversified investment option for various asset classes. Comment on each of the investment. The first one is stock. Stock are certificate of ownership in publicly traded companies. They provide investors with the possibility for high return, but this comes at a higher risk due to market volatility. Stocks are appropriate for long-term investors that are okay with market changes and believe in individual company growth potential. Diversification across different equity can help reduce the risk associated with individual stock performance. Next is ASB, which is Amanah Saham Berhad. ASB is a Malaysian government-linked investment vehicle targeted largely toward Bumiputra investors. It offers relative stability in the form of dividend income and potential capital appreciation. ASB is popular choice among Malaysia Bumiputra investors looking for a mix of income and growth. Is it crucial to remember, however, that it is inaccessible to non-Bumiputra individuals and has redemption limits which can influence liquidity. Lastly, unit trust or mutual fund, also known as unit trust, are professionally managed investment vehicles that aggregate money from various investors to form diverse portfolios. They reduce risk by providing diversification across asset classes and industry. Mutual funds are ideal for investors who desire to delegate investment management. While management fees are charged, the benefit of expert management and diversification frequently outweigh these expenses. Before selecting a fund, investors should carefully consider its objective, cost, and past performance.
So let's move to Sharia perspective for each product investment. For the first is stock. There are two types under the stock. The first is pros from a Sharia perspective, and the second is con from Sharia perspective. So let's discuss one by one. For the pros from a Sharia perspective, for the first is ownership in permitted businesses, which means stock can be Sharia compliant if invested in firms that engage in permitted, which means halal, commercial activities such as technology, healthcare, or consumer product. So second is capital growth prospect, which means profiting from a rise in the value of your share is acceptable in Islamic finance. Let's move to the second type, which means cons from Sharia perspective. First is non-compliant companies, which means companies that engage in prohibited activities, which means alcohol, gambling, and pork, are not Sharia compliant, and investment in such equities is prohibited. So the second is excessive debt, which means stock of corporation with a lot of interest bearing that may not be Sharia compliant. The second is ASB. They also have a two type of the product investment, which is stock. For the pros for a Sharia perspective is dividend income, which is ASB invests predominantly in Sharia compliant asset, and the income it provides to investor is widely regarded as halal. The second aspect is government oversight, which is ASB is subject to government rules and Sharia compliant norms, ensuring that Islamic finance principles are followed. For the second type of the product investment is con from a Sharia perspective. For the first aspect is limited access. ASB is primarily intended for Malaysian Bumiputra investor, with non-Bumiputra persona having limited access. ASB units are subject to redemption periods and retraction, which is impact liquidity and access to money. Lastly is unit trust. They also seem to have a two type that provide product investment, which is stock and ASB. For the pros from a Sharia perspective, the first aspect is diversification, which is Sharia compliant unit trusts help to spread risk by providing diversification across multiple Sharia compliant assets. Professional management ensures that the portfolio follows Sharia requirements. For the cons from Sharia perspective, the first aspect is criteria for selection, which is it is critical to ensure that the underlying asset of the unit trust meets strict Sharia compliance scanning standard. Non-compliant companies or industries should be avoided. The second aspect is management fees, which is management fees are frequently charged by unit trusts and should be transparent and appropriate according to Sharia norms. In summary, the overall investment product from a Sharia perspective, for the first is stock. Stock can be Sharia compliant if invested in allowed enterprises, but careful scanning is required. For the second ASB, is generally Sharia compliant with the potential for both consistent income and capital application. Sharia compliant unit trust, which is mutual fund, offer diversification and asset management, but investor must guarantee that the underlying assets follow Sharia requirements. In conclusion, our group was decided to provide product investment, ASB, and stock to Mr. Haikal. The reason why we suggest to Mr. Haikal ASB because the fixed price of the ASB for the per unit just RM1 Malaysia only. The second suggestion why we suggest Mr. Haikal because Mr. Haikal stock because can be volatile and investor often face unpredictable ups and downs. For example, when a stock price moves quickly and by significant amount, the volatility can have a big impact on a portfolio. Apart from that, the main reason we would not advise Mr. Haikal to invest in a unit trust is that despite the fact that the profit we will make from the investment by more than that of an ASB or share. The product is a conventional one that does not adhere to share.
I think that is all from us. Thank you. Bye-bye.